Right now, all eyes are on Nvidia's Blackwell platform, and for good reason. With an $11 billion revenue surge, Nvidia is on a trajectory to hit $15 to $20 billion per quarter. Some investors were skeptical about continued demand, but the reality is quite the opposite. Big tech and enterprises are doubling down, further amplifying Nvidia's dominance in AI. In fact, for every $1 spent on an Nvidia chip, an estimated $8 to $10 is spent across the broader tech ecosystem, from data center expansions to cloud services and software optimizations. This is what makes Nvidia not just a semiconductor company but the backbone of AI infrastructure itself. Wall Street analyst Dan Ives projects that Nvidia is on track for a $4 to $5 trillion market cap, barring any unexpected black swan events. For years, critics have been betting against Nvidia, but time and time again the company has proved them wrong. And let's be honest, when it comes to AI chips, there's only one red phone in the world, and it belongs to Jensen Huang. The black leather jacket-wearing CEO has turned Nvidia into an industry powerhouse, continuously staying ahead of the curve. But with Nvidia's stock slightly down year-to-date, investors are starting to ask, what's the next major catalyst that could push the stock higher? Everyone is curious about what's next for Nvidia. One of the biggest upcoming events is Nvidia's March conference, which is expected to be a game-changing moment for the company. This event could serve as yet another launchpad for Jensen and his team to reinforce Nvidia's position as the leader in AI hardware and software. The focus will be on Blackwell's demand. Will it live up to the hype? If Nvidia confirms that orders are booked out for the foreseeable future, it could reignite bullish momentum for the stock. Despite concerns from bearish analysts, one thing remains clear. The demand for AI infrastructure is accelerating, and Nvidia continues to be at the center of it all.
I mean, it's all about Blackwell that's fueling. I mean, 11 billion. That shows, I mean, this is going to be on a trajectory of 15, 20 billion a quarter. So if you had any concerns, it's the opposite. Big tech, other enterprises, they're doubling down. That's the multiplier effect across tech. For every dollar spent on a NVIDIA chip, $8, $10 spent across the rest of tech.
What is your x-axis? When you look at technology development, we'll talk to Mandeep Singh about this in a moment. Dan Ives, do you have a timeline out on NVIDIA? Do you have a terminal value on NVIDIA that's appropriate? 7 years? What is it?
I think 2 to 225 to me is ultimately going to be sort of the base case as this plays out. And again, you're not going to need like the massive blowouts. They stay on this trajectory. Outside of some black swan, and the bears will always hope for that like they have the last decade, I think this is a $4 and ultimately a $5 trillion market cap as it plays out. Wow. There is one red phone in the world for these chips, and he's wearing a black leather jacket, and his name is Jensen.
Dan, talk to us about just catalysts for this name. It's really unusual for NVIDIA shareholders to look down at their Bloomberg screen and see year-to-date stocks, down a couple of percent here, not to see a green on the screen here. What's the next catalyst, do you think, for this stock?
Yeah, look, I think catalyst now, clearly going forward, you're going to continue to focus on what Blackwell demand looks like, right? And NVIDIA, they'll have their conference in March. I think that's going to be a sort of spectacle. That's going to be another launching pad for Jensen, for NVIDIA. And look, and I think there was all smoke, no fire. And I just continue, and we've talked about it on the show, DeepSeek is bullish for NVIDIA and big tech. It's not the opposite, despite, many of the bears yelling fire in a crowd theater. If you're just joining us, folks, Mandeep Singh will be with us in a moment from Bloomberg Intelligence. We start with Daniel Ives of Wedbush, their head of technology. For those of you on Bloomberg Radio, it is critical to point out Ives with the Penn State Nittany Lions merch in the background. Yes, exactly. This morning. At Penn State, Dan Ives, they're going to have to do a rebuy of Apple technology. We had Mark Gurman in 4, 5, 6 days ago, and we started with a chip, and it was like Mandeep Singh talk. And Dan Ives, Gurman was riveting about the technological veracity of the Apple story. Do you agree?
This raises an interesting point. Does Nvidia really have supply constraints, or is demand not as overwhelming as expected? The lack of discussion on Blackwell's backlog could be strategic. Nvidia might want to maintain flexibility in its supply chain or avoid making promises it can't keep. Still, It's unusual for a company that has historically been transparent about demand trends to suddenly go silent on such a critical topic. Now, to be clear, this is not a negative outlook on Nvidia's future. The company still dominates AI infrastructure, but short-term market reactions are being driven by these small uncertainties. Nvidia's long-term trajectory remains strong, but in the immediate term, investors are waiting for more clarity. Let's talk numbers. Nvidia's latest earnings report was strong, but not quite the blockbuster performance investors were hoping for. The company raised its revenue guidance by $1 billion for April, which is solid, but the market was expecting an even bigger raise, possibly several $billion more. Additionally, profit margins came in at 71%, slightly below the street's expectation of 72%. For a company priced for perfection, even a minor shortfall can result in a stock pullback. Now, here's something interesting. In after-hours trading, Nvidia's stock initially moved up, but a key question about tariffs and supply chain issues seemed to rattle investor confidence, causing the stock to dip. One major concern is whether Nvidia's margins will improve in the second half of the year. The company expects margins to recover to 75%, but with ongoing tariff uncertainties, some investors are waiting for clearer answers. Now let's step back for a second and look at the bigger picture. Despite short-term concerns about margin pressure and supply chain risks, Nvidia's fundamental story hasn't changed. The demand for AI computing power is not slowing down. Major corporations, cloud providers, and governments are investing billions in AI infrastructure, and Nvidia remains the go-to player in the space. Yes, there may be some short-term volatility, but long-term investors should be focusing on Nvidia's ability to sustain leadership in AI acceleration. And as we move forward, the key question for Nvidia will be, can they exceed growth expectations for 2026? If they can, this stock still has plenty of room to run. Coming up next, we'll dive deeper into Nvidia's AI roadmap and whether Blackwell's demand can drive the stock to new highs. Stay tuned. Nvidia's post-earnings stock movement has sparked a critical question. Can the company ramp up its profit margins in the second half of the year? This remains a major concern for investors, as Nvidia's explosive growth has set sky-high expectations that the company now needs to exceed. One of the biggest talking points from the earnings call was the backlog for Blackwell chips in 2025. In previous reports, Nvidia confidently stated that Blackwell would be sold out for multiple quarters, a sign of overwhelming demand. However, this time that statement was missing from the CFO's letter, and surprisingly, no one asked about it on the earnings call. This absence of confirmation has led to investor uncertainty. If Blackwell's demand was as strong as previously projected, why was it not reaffirmed? Many investors expected Nvidia to say that Blackwell is completely sold out for 2025, but without that assurance, doubts have crept in. Now, to be clear, this is not a negative outlook on Nvidia's future. The company still dominates AI infrastructure, but these small uncertainties are driving short-term market reactions. Nvidia's long-term trajectory remains strong, but in the immediate term, investors are waiting for more clarity. Despite some short-term concerns, the big picture for AI remains extremely bullish. Nvidia made it clear that we are still in the early stages of AI development, and the demand for high-performance computing power will only increase. Nvidia's Blackwell architecture is projected to be 2 to 8 times more powerful than anything currently available, making it a critical technology for next-gen AI models. The key question isn't whether demand exists, it's whether Nvidia can continue keeping up with it and exceed Wall Street's 2026 growth expectations. Currently, analysts forecast 23% growth for Nvidia in 2026, but some believe it could exceed 30% or more, especially if the demand for AI-driven computing power continues accelerating.
Deepwater owns Nvidia's stocks. Gene, it was good, just not good enough.
Yeah, I would actually say it was great, but not extraordinary. And that's really what this needs to be. And when you think about extraordinary, you got to beat the whisper on what the raise is. And so the whisper was that they're going to raise by a couple billion. They raised by $1 billion for April. As however you said in the setup, is the margin guidance. They talked about that being a couple percentage below what the street was at, 1% specifically, at 71% versus 72. And when you have a company like this that, of course, the expectations are so high, I think in any normal environment would be down. When you talk about margin pressure, I think it's justification for the stock to probably trade lower on the first trading tomorrow morning U.S. time. I expect it probably to be down, my guess is probably around 5%, because I think that margin really stung. And it was interesting to look at the stock in the after hours trading. It was up a couple percent up until a few minutes to the last question on the call. And the question was related to tariffs, and specifically is, can you get that ramp in margins? Because I mentioned the negative commentary about April margins. They also said that margins would ramp in the back half of the year, back to the mid 70%. So it goes basically go from 70% to 75%. And can you achieve that with the tariffs situation getting more intense? And the answer was, we don't know. It's a fluid environment, and it's not baked into our guidance. And so you quickly saw the stock drop a couple percent. It's kind of faded since then. And so what that tells us, that stock reaction, looking at it in the aftermarket, it really gives insight to what investors are thinking. And what they're thinking, the central question they're asking right now is, can these margins ramp in the back half of the year? And I think that was a little bit in question. One more point that's, I think, critical here is that the setup going into this, one of the central questions, a pressure point, which I would describe it as, was what was the backlog? How long would they be sold out of Blackwell in calendar 25? And last quarter, when they talked about calendar 25, they said it would be several quarters that they would be sold out of Blackwell. And a lot of investors were focused on, like, what's going to be the new commentary? Are they going to say that it's sold out for the full year of 25? That kind of was the expectation. But they pulled that language from the CFO letter, and surprisingly, no one asked the question on the call. And I think that kind of the absence of that, I think, is also nagging at investors kind of some of their confidence right now. So I just want to highlight, it sounds like I'm really down on Nvidia, but I just want to highlight that there were some headwinds, but there are also some very positive long-term pieces to it that I think will ultimately, even though the stock trades off tomorrow, cause the stock to move higher over the next year and 2 years.
So, Gene, a lack of clarity on how it might do in the coming quarters and coming years, for that matter, 26, 27. I mean, you alluded to the demand for Blackwell, for instance, how strong it's going to be. What is the sense you're getting? How are you reading into all of that?
Well, I think demand is, they said that it's at all-time highs, but ultimately this concept that we're early and you need hardware to build that, I think that is really important. The other piece is that they talked about the performance difference with Blackwell being 2 to 8x better than anything else, any custom chips. So ultimately, I think that this is still very early in terms of where the demand curve could go. So I think we're still very early. Like, how early are we in AI? We're probably in inning 1 of a 9-inning game at this point.
So given expectations of that 5% drop when Nvidia trades tomorrow, your time, would it be a buying opportunity if you believe in the longer-term story of Nvidia and AI, as you alluded to as well?
Ultimately, it is. And I think the central question is, can they exceed the numbers for calendar 26? That's what this all boils down to. And so the 25 is kind of a throwaway because we just got to get this ramp in the back half of the year. But the street's looking for 23% growth. And that's the question that I think all investors need to ask themselves. From our perspective, we think that they could probably grow 30% or better in calendar 26. And part of that reason is, again, this need for greater compute. And I just want to put a finer point on that. How can they grow faster than that 23%?
This is an important point to consider. While some investors are focused on near-term uncertainties, the long-term trajectory remains bullish. We've seen this story before. Nvidia delivers on innovation, and the stock tends to outperform over time. One of the most surprising moments from the earnings call was Jensen Huang's take on the future of computing power. Huang emphasized that AI is shifting from basic generative models to more complex reasoning-based AI. This transition will require significantly more computing power, but just how much more? Initially, Huang stated that reasoning-based AI would require 100 times more computing power, a massive increase. But then, he took it even further, suggesting that next-generation AI and robotics could need hundreds of thousands, or even 1,000,000 times more computing power. For some investors, these numbers seemed hard to grasp, maybe even too optimistic. But if even a fraction of this prediction is correct, Nvidia's chips will remain in unprecedented demand for years to come.
Jensen did not give that critical update in terms of how the backlog was, where they sold out for this year. But he did say something that the need for compute for these next generation models is going to go up exponentially. And the numbers he gave were so crazy, it's just hard for me to even wrap my head around it. They're so crazy, he almost loses credibility on it. But let me just frame those in. Is that he said when you do a spot prompt, which is something basically asking a generative model a question where you get a quick response back, that the shift from that to reasoning, when it thinks a little bit longer on it, this of course is one of the big trends in AI, is the shift from just generative AI to more reasoning AI, is that reasoning piece requires anywhere from 100 times more compute. That's where he started at in the call. And then a minute later, he said it could be thousands, hundreds of thousands, or 1,000,000 times. I did go back and check the transcript on this. 1,000,000 times more compute. And what he's saying is the need for this advanced compute to really power reasoning, and then what's considered physical AI and robotics AI is still going to be ramping. And that's ultimately why I think that this is a buy here on the pullback.
This is where perspective matters. While it's easy to dismiss these projections as overhyped, history has shown that Nvidia has consistently been ahead of the curve in predicting industry trends. The shift to AI-driven reasoning and robotics is still in its infancy, but when it takes off, it will require a level of computing power that few companies besides Nvidia can deliver. So, is this a buy-the-dip opportunity? With Nvidia's stock down slightly, some investors are wondering whether this is a short-term pullback or a long-term buying opportunity. If you believe in the long-term AI revolution, this dip could be a great entry point. The demand for high-performance computing is not slowing down, and Nvidia remains the undisputed leader in this space. As Blackwell rolls out and next-generation AI models require exponentially greater computing power, Nvidia's business model remains incredibly strong. The real question for investors is this: can Nvidia continue to exceed growth expectations in 2026 and beyond? If they do, then despite short-term pullbacks, Nvidia could still be one of the best long-term AI investments on the market. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.